Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange, a leading crypto trading platform. I think this year only cryptos are doing well. Stock markets, having a huge volatility. And today, nobody expected markets to behave like this. GIFT Nifty in the morning indicated only about 50-60 point gap down. And this credit rating agency FITCH cut the US credit rating from AAA to AA+. This news was already there even before our market opened. And Asian market did not react much. They were down but not out. And GIFT Nifty was also indicating only 50-60 point gap down. And then European US futures were also, they were down but slightly. Maybe 0.2% to 0.5%. But as soon as our market opened, market started falling. And always, whenever there is a bigger global event, the India will react first. And today morning, India reacted already. Market started falling. It fell non-stop. At some point of time, Nifty was down more than 300 points. Whereas GIFT Nifty indicated only 50-60 point. And when people want to exit, they all want to exit at the same time. So that's why the fall is free fall. When they take the position, they don't take at the same time. So they take step by step. So that's why always markets go up by staircase but comes down by lift. So I did not think this Fitch rating news will be having such a big impact. I still feel that this is only a knee-jerk reaction. It's not, about our fundamentals. Our fundamentals are intact. Yesterday, manufacturing PMI data came, which was above 57. GST collection came at 1.65 lakh crore. So everything is looking okay. But this is just a knee-jerk reaction. Not only in India, everywhere. European markets opened Indian time around 12:30. So they also started falling aggressively. And then Dow future fell more than 300 points. So the panic gripped the Indian market. And Nifty and Bank Nifty both went for a free fall. I think at some point Bank Nifty was down nearly 900 points. And Nifty down about 300 points. Then in the last 1 hour, a recovery. And the recovery was a very, very nice recovery. Nifty recovered about 100 points. Bank Nifty about 200 points. So, what has actually happened? When this kind of thing happens, some business channels, they were comparing, what happened in 2011. 2011 was the first time US rating, credit rating was cut down from AAA to AA+. So they started talking what happened that time. That time, just before the ratings cut, the markets were already down by 8 to 10%. And after that, during the next 1 month, it fell 5 to 6%. The total fall was 15-16%. So this kind of news creates a panic. And 2011 is clearly different from 2023. There are many reasons. Number one, post Lehman Brothers collapse, so there was a huge rally all over the world. And then this problem in 2011 came. Number one, it was not only the US problem, even the Europe, Italy, Greece. These countries were on the verge of bankruptcy. There was a huge problem in Europe. And US, ruling party and opposition party, they did not come together to solve the debt ceiling issue. They were just fighting with each other. So the situation was very, very bad that time. And in fact, that was the reason why they cut the rating. But now, things are not like that. So the things are much different from 2011. So I don't think that stock market all over the world will be reacting now same as how they reacted in 2011, right? So, sometimes it's better, it's good to look at the past, but you just cannot draw 1:1 correlation. So, while talking to you right now, the Dow future recovered from -300 to -100. Remember, the Dow, out of the last 16 trading session, Dow was up for 15 trading sessions. And today, it is indicating 100 point gap down, which is less than 0.25%. 100 point falling on an index which is trading around 35,000 plus, it is less than 0.25%. It's nothing big. It can happen in a normal trading session. So this is actually the reaction. But again, we do not know. US markets will open around 7 p.m. Indian time and it will run until 1:30 a.m. Indian time. So we need to see whether there is any other reaction and so on. But generally, any big news comes, it is being factored in even before the market open, because their after market hours, pre-market all trade very, very actively, not like India. So there, US markets trade up to 22, 23 hours per day, right? I'm talking about regular trading hours plus pre-market plus post-market plus after-market. So they have 4 kinds of markets. So I don't think that, it's going to be much different. So anyway, we will have to wait and see. And today, FIIs have sold for about 1,900 crore. Once again, this is just nothing. Last Thursday, on an expiry day, they sold for 4,000 crore. And today, on such a big news, and Nifty falling 300 point, they are selling 1,900 crore is nothing. But still, why the market fell so much? Because today the domestic institutions did not buy. They did not support the market. They just they just sold for 2 crore rupees, right? So, but despite that, in the last 1 hour, there was a very big recovery. Even right now, I'm looking at GIFT Nifty. It is trading almost flat. In fact, 10-15 point plus only, right? So therefore, what is happened today, I think it's clearly a knee-jerk reaction. Markets are likely to stabilize going forward. I think the markets will focus on other things like US jobs data, Apple and Amazon corporate results, and here also, right? I think one negative thing today, the 19,500. So I told you, as per this box theory, Nifty is trading between 19,500 and 20,000. But in this range, it has been trading very, very violently. Today, 19,500 was broken decisively. It went up to 19,400. But on closing basis, it closed above 19,500. That's one thing. Second thing, since April 1st week, when the uptrend started, so Nifty did not close way below 20-day simple moving average. 2 or 3 times, intraday it came below that, but it closed above that. But I think 1 or 2 occasions it closed slightly below 20-day moving average. But today it has closed decisively about 100 point below 20-day simple moving average. But again, 20-day simple moving average is just only one aspect. So we have to look at all the other aspects. So anyway, let us hope that 19,500 is not broken tomorrow also, but it all depends upon the US markets where it's going to close. So this kind of, sudden sell-off is an opportunity if you did not take a long position earlier. So that's my opinion. Of course, I'm not a SEBI registered guy, but I'm not recommending any particular thing. But if you take a long position, you always have to hedge your positions, and that is always good. So hope you enjoyed watching this video. Thank you for watching.